Welcome, everybody. This is the Day Trading Options Daily Review for November 9th, 2015. We're happy to have you join us. Don't miss any of our exciting sessions. Make sure you hit the subscribe button in the bottom right-hand corner, and in the descriptions you'll find links to the courses that we reference in this review. Basically, we want to show you that it's possible to make 10% in 10 minutes on your money in the options market pretty much every day. And we've done over 113 of these this year. And there's only the odd day where you don't want to do it. And that's because the Federal Reserve Bank causes havoc 8 times a year. So most of the time, you're not going to have a problem with them. And if you do, you should know, because the software will tell you, by the way, the Federal Reserve Bank is going to cause havoc in the market today, so beware. It's kind of like when a tidal wave comes to hit the shore. You know, it's bad news for a lot of people, but if you happen to be up in the high land and the water doesn't reach you, you're feeling pretty good and pretty safe about yourself. If you're on the beach, you have a choice, and one is to run into the water and splash around and swim, and the other is to run for higher ground. And we're going to show you how to tell when the tidal wave is coming, which we call 10% in 10 minutes, and get to the higher ground so that you can watch and enjoy the ride and make your 10%, not get wiped out and smashed against the rocks by the water. So with that, we're on the replay for November 9th. And I'm Scott, he's Alan. And Alan, was it possible for us to achieve our goal today?
Yep, it's pretty easy, actually. Some days are really easy and others are a little bit of work, but not too bad. This one is one of the more normal to easy kind of days. And so here we're just showing what we call the basket, which is an aggregate of all the stocks that we care about for this day. The system tells you, well, that one's not so good anymore, and here's some other ones that you might like, and it does all that for you. Anyway, so the one I want to look at this moment is WIN. Now, there's a couple features in the world of indicators we have here. This star shows up on a list that says, hey, might want to look at that. But there are usual things that we've said many times is, well, how's the overall market doing? Well, it's kind of red. And here it's got this new thing which says that, yep, either this move is going to continue, that's what the blue star, or that's the end of it. But this looks more like the beginning of a move rather than the end of a move in this case. And that's all in the coaching, the training, and the replay. You can learn all that. But here we go. I'm just going to hit the buy button on that. Where's my, right there. Okay, so I hit the buy button. And so you can see that I got good volume. The market's in good shape. All that is right there.
It's a sunny day.
Yeah, sunny day. That's just our weather indicator. It says it's okay to be out there and play. So we're going to go forward here 1 minute. So we're up 7%. 2, so there's a little bit of pullback. 3, and there's your 13%. And this is good enough for us. We're just mostly interested in teaching people in the beginning how to make money off these short bursts. And really, when people get good at the system, they start to learn how they can make better percentages when it's the right time. It's a bit complicated to get in all that. We just want you to succeed in the beginning, and then you can become more successful after you play with it. So I'm going to hit the sell button. And so we're out of that, and we made 12.5%. Let's go look at the next opportunity, and this one's Amazon. And I just want to point out, I'm going to put this aside. Same situation. We've got the weather says cloudy, so it's like, well, things might not be as good, but it's still pretty strong in the red department. And this is fitting our rules where it's a breakout. You've got the right kind of color. So we're a little bit cautious on this, but it still looks okay. It's not bad. It's just you need to be careful. So we're going to go forward here. I hit the buy button, and on the put. So here we go, 1 minute, 4%, 2, 3, 4, 5. So you can see it pulled back a little bit. 6. We're still, that's a tiny loss. We call that flutter. 7 minutes. So it's still going our way. And you can see now how the market has become strong. Up here, it's like, this is looking really good. You know, you still got lots of strength in this department. The volume on this stock's not that big, but you know, part of what you learn is you only need 9 out of 10 things to be right. It doesn't have to be perfect. You know, it's not like you're going to send the meal back to the kitchen. It's like, I'll take that. You know, well, you didn't straighten the beans weren't quite in line on the plate. It's like, no, this is good enough. It's you know, I can make some money here. So we're not looking for perfection. So we're still into, this one's taking longer today than our 10 minutes. But we kind of knew that when it was on the cloudy in the beginning. So our 11%, I think it'd go further, but we just take our profit. And if you want to get better, we have tools for that. So let's go look at a third one here. And this is Google, different time. It's a little later, but here I already hit the buy and the put. Same kind of setup. You can see how, you know, this is a different time. It's later. You can see how things are all good there and fits our rules, broke out of the zone. We got the indicators agreeing with us. Let's see how that one turned out. So it pulls back a little. That's not a problem. 2 minutes, 3, 4, 5, 6, 7, 8, 9. This is where people get worried. Oh no, but you see, it hasn't ran away. This is a concern. So sometimes the trades you have to hang in a little longer, or you can get out. Here you can get out at break even and say, you know, I don't like it anymore. The market's still red though. Now it's starting to break and give it to you. So the question is, if it breaks this, you're probably good and going to make some nice money. I'm just moving forward. It's taken a while, but it is 10:30. So there it is. It's still moving your way. It did break that, and now you're at 10%. I'm just going to not hit the sell button, because it's going to probably run down to the previous low. The market has gone green.
Where is it? Oh yeah, there's the previous low. If you can just circle it at the bottom for those of us that are colorblind.
Yeah, and yeah, you can.
So what you're saying is at this point we've sort of broken through that Y point that was sort of the orangey line, and and you're thinking, you know what, this probably can go to 727, you know, closer to 727. So why not just see?
Yeah, and that's where people need to build their own rules a little bit. Like, we'll give you the template and you adjust it for your comfort. There's a lot of traders that say, listen, the market's turned. It's gone neutral to green, although some of it still seems reddish. You know, I'm at SA, which is another one of those things we tell you. It's not the best. It's like, that's another turn point. You already had some slow struggling to get down there. This may go further. It may not. This is not one of the best. It's an okay, but it's not one of the best probabilities to run lower. So for me, I would just say I'm done.
Right.
And because it doesn't have all the features going for it. But if you're in profit, you could, and this is the fun part, is you could say, well, listen, I'm willing for it to come all the way back up to here. So I'm at zero. Cost me nothing to play today. So if it runs down, great. And if it doesn't, and that's the stuff that you'll want to, you know, look at when you're in the replay. That's the whole point of the replay, is like, well, will it, won't it? Well, what's the market doing? Well, the market's been, this is the basket. The market has went red and it's been sideways for quite a while. And you're coming up to 11 o'clock. And the half hours are quite often a turning point. So there's a lot of things to me that says I'd only stay in for a couple more minutes at most. It's not my best trade. And I haven't looked at this one. I can't remember how this one turned out. So I would probably just take the money and leave. But for curiosity, and that's the beauty of the replay, is like, well, you know, I think, great. So here we go. We're moving forward. I got another Y point. I'm at the 9:45 break. That's also another one of those turn points. You know, the market's starting to go green. I'm at 13%, you know, and then it starts to break, like just really cave in and go. Why? because the market did. So we're
Hmm.
not fighting the market; we're going with it. And it's, you know, you're at this point, you're into trade for a long time, and that's what happens when it's after 10:30 market time. Is you sometimes have to hang around a lot longer. So just for simplicity, I'm going to hit the sell button, and then we can go just do a quick review. But the idea is that you can, you know, the previous low would be a point where if it bounces or breaks and all that, but we've already been it for a long time. So that's where you
And
can.
and in this particular case, we got close to that previous low, which is going to be resistance, which means it'll probably be going up and down and around this line for a while. But
Mhm.
this, what I like about this particular example is, you know, we had the SA point, we got through that, and then it was kind of like, oh, we're in a bit of a free fall to the previous low because that's the next area of resistance.
Yes. Yeah.
And so it wasn't, you know, it wasn't that we just said, well, let's just sort of see. It was when you look at the charts and you understand how they're set up for you, you can go, well, okay, you know, it took us, you know, 1, 2, 3, 4, 5, 6, 7, about 7 candles to kind of get down to the SA. And
Yep.
now it's like, oh, well, we made it there. If it breaks through, the thing's going to go another, you know, $1.50 or something, which is going to give us 20%. So that's not a high risk move. It's kind of like, well, it's kind of like, hey, we've got this, you know, you're running the football game, right? And you've caught the ball and you're running and you get by the linebacker and you look and then the safety is 30 feet away from you. You know you can get another 10 or 20 feet before he's going to reach you. You're not going to just lay down and say, well, okay, I got my 10 yards, we got a first down. It's like, oh, I got a little bit of space here to run. And that's what we're trying to show you in this particular example is, oh, there's a little bit of space here. I can quite easily get another buck out of this trade, and then I'm going to go for it. If that previous low had been up just around 728 or very close to the SA, it would probably not have been worth it.
Yeah.
To
If it was here, like you're saying, it'd be like, nah, and you're already here. Just get
Yeah,
out.
that's right. That's right. So like, there's a big linebacker coming at you hard, you know, and you're the quarterback. That's when you slide down, right?
Yeah. Yeah.
You don't try to take these guys on. But in this case, the safety is a long ways away. You got a little bit of room and go for it. So excellent example here, Alan.
Oh, well, thank you, Scott. Yeah, well, you know, and I like the way you explain it, just because it's and this is the whole point of the replay, that you've got, you know, 1,000 days to play with here. You know, just go pick one and soak in it and figure out, oh, that's how the you know, things move, because the market's driven by people. It's yeah, there's computers that do stuff, but it is people, and the computers are just driven by what people think. They don't do it
Mhm.
randomly. So this business of a previous low and all these, like the SA, these are pre-established behaviors out of
Right.
people.
So one of the things that can happen at the previous low is 2 weeks ago, some guy got on his computer and said, when Goog hits that previous low, 727, buy, because that is a huge buying opportunity. And
Hmm.
then and it just automatically happens. So when we get close to it, we know that there's going to be a bounce up because there's going to be a bunch of people who are waiting who now decide that this is a good buying opportunity. And this is why it goes up and down, and you rarely see, you know, 30 red candles in a row, because at some point somebody has already decided that this is when I'm going to buy, because I want to push it back up, because I can't believe it's going to be this low. It's a great deal. You know, it's like you go to the grocery store and apples are 99 cents after being 2.50 a pound. You're buying a bunch of apples because, man, that's a great deal, and that's the way these people look at it. So if you know that, hey, this previous low is coming up, and there's a good chance that uh, Warren Buffett's going to be jumping in and buying a ton. I'm
Hmm.
just throw a name dropping here, but you know, somebody is going to be buying it. Why would you fight it? It's like, no, I'm gonna run to the previous low. That linebacker's coming at me. I'm just going to slide down, and now I've taken my extra 10 yards and I'm happy, right?
Yeah.
Cool.
So
So how did we do?
review. Remember, we say that the first part of the morning is usually faster. So here we go. In 3 minutes, we made 12%. And then in 11 minutes, we made 11%. And then here it took us about a half hour to get the 20%. And we could have maybe been in 25 minutes, got the 10%, but it just takes a little bit longer later in the morning because there's less orders sitting around. What happens in the morning is that there's all these people saying, well, when the market opens, and
Right.
if the price is this way, and so that's why the volume is higher, and that's why the movements are higher, is because there's a lot more trading pushing the market one way or another. So it's higher speed. And
Right.
then, of course, lunchtime it slows down because the the professional brokers and all that. And so there you are.
There you are. And you know what's interesting about today, and we don't always see this, is and we basically tell you, like, do one trade. Like, this is not a game of do as many trades as you want. It's like, do one trade. If you want to make more money, buy more contracts. So but in this particular day, it's interesting that at 9:46 you got out at one, at 10:10 you got into the next one, and at 10:20 you got out 10:20. So you actually could have made 12%, 10%, and 19% one after the other with basically working for an hour and a half. So that's kind of nice. We don't always
Yeah,
see
and
that.
we do have a couple traders that they do trade the market all day long, and we don't say, hey, you should do that, but they're trying to amp up how much money they're making.
Hmm. So it's there you go. There's lots of opportunities. So we hope you enjoyed this. We hope your eyes were opened. We hope that you understand why we're so excited about trading options. You can trade all the options you want. It doesn't affect the underlying stock price, unlike when you buy the stock itself or short sell it. And you get to leverage your money. So it works out really good, way better than getting 2% a year in the bank. And if you want to know more, hit the descriptions. We've got some great discounts on our courses. When you take the course, you get a free month so that you can do the replay and you can practice with this. We really think it's important that you practice. You get a coach to help you because you're going to make mistakes. We have courses, by the way, also on the brain side of trading, because most of the people who have been trading with us for, a couple people come to mind it's been a 10-year journey, and throughout that journey, there are times when they could have taken all the money out of the bank and burnt it on a bonfire for the way they were behaving, as a, and the decisions that they were making. It would have at least given them some heat for a few minutes. And so they recognize that like, it's not the stock market, it's not the options, not the program, it's not the platform, it's not IB, it's me. I am getting in too late consistently. I'm getting out too late or too early consistently. I am doing something that is very consistent that is costing me money. So we have a couple of courses that address the mindset of a successful trader. They're excellent. We've interviewed top traders. What is your routine? How do you prepare? What do you do when you're doing your trades? And everybody that takes that course gives us feedback saying, man, I do this all the time. No wonder I'm not as successful as I want to be. So it's kind of like, you can give a guy a chainsaw and you give him an axe, you can tell him to cut down a tree and he cuts off his leg. So you need, why did that happen? Well, it could be training, and it could also be a subconscious desire to cut off your leg. And you need to deal with those things. So I just wanted to sort of throw that out because it's an important part of the whole process. Do you really think that you can trade and make money? If you deep down subconsciously don't, guess what? You're right. And so we need to address those things in addition to the technical, push here, click here. And that's why a coach is so important, because our coaches are very experienced. They're very successful traders. They don't need to coach. They just do it because they recognize that Allen's software has changed their life and they want to give back. And one of the ways we asked them to give back was to spend a little time and help you. So they'll be able to see exactly what you're doing and say, you know what, Scott, you always get in too late and then you get out too early, and or you wait too long and it turns against you, and that's why you're always losing 20%. So stop that. And why are you doing that? And they're not going to psychoanalyze you or anything else, but the part that really helps is when you are aware of what you do, you then can take action to stop it. When you're unaware, you can't. And it's just the way it is. And so it's important that you be aware. You be aware that you can make 10% in 10 minutes. You can be aware that there are programs at work. You can be aware of training that will help you understand the programs. You can be aware that the market will give you what you want. And then you can be aware of the things that you're going to do to screw it up. And you just have to look at in National Enquirer or any of these gossip magazines to see a whole bunch of people that are multimillionaires screwing up their lives. and recognize that you're really no different than them, and you're going to do the same thing, but you don't have to. And that's the key, is you can get the training, you can understand where your strengths and weaknesses are, and then you can be successful. And that means that you don't this industry is full of stories about people that bought a future on gold and made $500,000 in 3 months, and then 3 months later we're down to their last gold contract that was, $500 in the bank is all they had because they lost it all, and then they made it again. And you can have those huge swings, or you can just have this nice steady income and live a wonderful life that you want. And I think no drama in the money field is kind of the best way to live life, in my opinion. So there's Scott's rant for today.
Come back tomorrow.
Come back tomorrow. It'll be a different one. Anything you want to add to that, Alan?
Yeah, I think you said it all, but I just, I recently heard a story of a fellow who's got a 230 IQ. You have to forgive me for telling this story multiple times, but he's like the third smartest guy of all time. And he lost $65 million trading somebody else's money because they thought, hey, and the reason I mention that is you go, well, and Albert Einstein and Bose in the 30s, they tried to beat the stock market with their math and formulas and so forth. And it's like, here it is, you guys right here watching this have the opportunity to beat Einstein, Bose, who, yes, Bose, the sound thing, he was a awesome mathematician from back then. And this guy who's got a 230 IQ, you beat them all. You beat Wall Street, who at best gives, on average, an 8% per year return. And you get to be smarter than all of them just by learning a few circles and colors, and you get to change the colors. And I'm not trying to make it dumb like you're drawing crayon stuff. It takes some training, and that's where the mindset part where you're going to overcome a bit of that. Mm-hmm. But I mean, really, what do we keep saying? Look for this. And there's some, provisos that we teach you in the training. So you get to beat all those guys. That's amazing. And you get to get paid for it. So it's like, in your circles, you get to be the genius. That's
right. So thanks for joining us, everybody. Appreciate having you along for the ride, and we look forward to seeing you as successful traders. Bye-bye.